What's up everybody, I'm Jaspreet Singh, and with rising gas prices, home prices that are going through the roof, and grocery bills that keep getting bigger and bigger, it's really no surprise that 90% of Americans say that they are stressed out by money right now. Thrive Global just did a pretty intensive study, and what they found is that 9 out of 10 Americans, so the vast majority of people, are stressed out about money, and what they said was money issues are impacting their stress levels. The majority of people say that financial difficulties are piling up, that they can't overcome them. And then they say that the biggest issues that money problems are causing is how to plan for retirement, how to buy a home, how to buy a car, how to just fund my daily leisure activities, and then so many more things. So what I want to do today is go over the 3 things that you should focus on right now if you're stressed out with your money. That way now you can take better care of your money and grow your money. That way the money problems can be less stressful in your life. And the 3 things that I want to go over is 1, how to build a system for your money. That way now every dollar that you earn has a job, because if you don't give every dollar that you earn a job, it's just going to disappear, and then you're going to wonder where your money went. This is the biggest problem for the majority of people with their money. So first, we're going to systemize and automate your finances. Number 2, we're going to talk about how to use your money smartly. How can you put your money to work to earn you more money? How can you invest your money? How can you use assets to make you more wealthy without you just physically working to earn more dollars, because there's a limit to how much money that you can work every single day. And number 3, how can you grow your income? How can you increase the amount of dollars that are entering your financial system? So let me start here. How do we systemize your finances? Anytime I talk to somebody about money who is struggling with money, a very common thing that I hear is that, man, if I just made some more money, my money problems would be solved. If I could just make 10% more money, 20% more money, an extra 50 grand a year, all my money problems would be solved. But what happens to so many people in that situation is you work harder to get a raise, you get a promotion, you get a bonus. All of a sudden you start making more money, but then your expenses suddenly go up with your new income. This is why so many times you see people with high incomes that are still living broke. They're still living paycheck to paycheck, because if you do not have the right financial education on how to use your money, it does not matter how much money you win. You could go out and win the lottery and still end up broke. That's why the majority of lottery winners end up broke or bankrupt in just 5 years. So the real solution isn't just how much money you're making in the beginning, it's what you're doing with the money that you make. Now, once we know this, once we understand number 1 and 2, that's when making more money will have the biggest impact. And I'll talk about the ways that you can earn more money. But the first thing that you got to do is you got to understand how to systemize your money. In order to do that, you have to understand the difference between an asset and a liability. An asset is something that puts money in your pocket. A liability is something that takes money away from your pocket. Your clothes, your cars, your shoes, your vacations, your restaurants, all these things are liabilities. Assets are things that you buy for the sole purpose of making money. These would be things like your stock market investments, your real estate investments, not the home that you live in, but actual real estate investments. This could potentially be cryptocurrency, and anything that you're buying, your business, for the sole purpose. You're spending money on this for one reason and one reason only: to make money. The reason why I don't say that your home itself is an asset, because you're buying your home not for the purpose of making money, but for the purpose of having a place to live, for a purpose that you can make memories in. Sure, can it make money? Yeah. But you're not buying it with the reason and the goal of making money, which is why for so many people, their home is a money pit until you sell it, and then you just have to hope that you can sell your home for a profit. So what happens to so many people is you make money, and now you want to go off and start spending money, because you have to. You got to pay your rent, you got to pay your mortgage, you got to pay your gas for your car, you got to pay your phone bill, you got to pay for utilities. All these things are liabilities, and you spend your money, you spend your money, and spend your money, and then you pay for your groceries, and then you're left with little to nothing left. And if there is something left, that's when you can start investing. What the majority of people do is they invest very little. They spend their money and then they invest whatever's left, because they're worried about spending their money first. And what's happening here is all this money you're spending on liabilities is an asset for somebody. It's an asset for the person selling you the stuff. Because when you go to Lululemon, Gucci, Amazon, Kroger, Target, all the money that you spend at these companies is an asset for them, because the money that you're spending on your liabilities is going into somebody else's assets. It's going into Target, it's going into Amazon, it's going into Lululemon, it's going into Apple, it's going into their pockets and their profits. Now the key here is you can be one of the people who is benefiting from their profits, but you have to understand the difference between a liability and an asset. And what the wealthy people are doing is they're spending less money here and more money here. They're first investing money in themselves. They're first using their cash to buy assets, and then they live off of whatever's left, while the majority of people are spending their money on liabilities, and then they buy assets with whatever's left. So it's a shift in mindset, and there's ways that you can do that without completely changing your lifestyle, but you need to have a system for your money. The simplest thing that you can do is follow something like my 75-15-10 plan. Now you can create one that's more better suited for you, but this is just a simple thing that you can follow, where now every dollar that you earn is going to flow through this almost three-headed funnel, where now 75 cents out of every dollar that you earn is the maximum that you can spend. 15 cents out of every dollar that you earn is the minimum that you will be investing, and 10 cents out of every dollar that you earn is the minimum that you will be saving. Now what you're doing is you're automatically living below your means, but you're also automatically investing your money to make you wealthy. This is where the wealth is built. You're automatically saving some of your money. This is not where your wealth is going to be built. This is a cushion. I'm going to put this right here, cushion. This is to protect you against an emergency in case you lose a job. This is to protect you in case something goes wrong, your kid breaks their arm, you break your car, something happens, so you have some extra cash to fall back on so you don't have to go into credit card debt. And this is the money that you live off of. This is the money that you're spending for your home, your groceries, your lifestyle. So this is now, you have a system where no matter how much money you make, whether you're making 40 grand a year, $400,000 a year, or $4 million a year, you can follow the exact same system that way now you're investing, you're saving, and you're spending your money. That way now you're living below your means while you're also building wealth. Now here's the thing, when it comes to saving, anytime you're in a high inflationary environment, saving becomes less and less attractive because your savings are being eaten away by inflation. This is why, again, your savings are not here to make you wealthy, it's there to protect you. But you need to know how much money to save, because you just don't want to save your money forever. You should be saving somewhere between 3 months and a year's worth of expenses, depending on your risk tolerance. If you're okay with more risk, you don't have a lot of financial responsibilities, you don't have people relying on you, then a couple or a few months worth of savings is more than enough right now. Because right now you can be more aggressive with your investments. If you have people relying on you, or you don't like the idea of taking on a lot of risk, then maybe you should have more savings, because that's there to protect you. And now if something bad were to happen, you have a bigger savings cushion, and you can just fall back on that, and you won't really have to stress as much because you have cash to rely on. So you come up with the number, how much savings you want to have, and then once you hit that savings goal, you stop saving money. From now on, you should be only saving money for 3 reasons. You're saving your money for an emergency, you're saving your money for a big purchase, or you're saving your money for an investment. If you're not saving your money for one of these 3 reasons, you should not be saving your money. Now for the emergency side, saving your money for an emergency or something wrong, you only need that 3 to 12 months worth of expenses. After you do that, you stop saving your money here, and you start investing this money. Now the question is, where do you invest your money? And that will bring me to number 2, where we'll get to in just a second. But then with the spending, now you're going to be required to live below your means. And this can be hard for a lot of people, because sometimes we get accustomed to the lifestyle that we have. And you might think, how in the world am I only supposed to live off of 75% of the income that I have right now? I'm already living paycheck to paycheck. I'm already spending every dollar that I earn. Well, think about it this way. If the government were to tell you tomorrow that your taxes are going up, they're going to charge you another 25% tax, what are you going to do? You might kick, scream, cry, but then you're going to figure it out. You're going to find a way to pay it. It's the same thing here. Now you're going to be paying yourself first. You're doing this to make yourself wealthy, not just the government or some other entity. You're doing this for yourself. You will figure it out. It will be difficult, it will be hard, but if you're willing to put in the work, you will find a way to do it. You will find a way to live smaller. Maybe you have to sell some stuff, maybe you have to downsize, maybe you don't buy as much stuff, but you will be able to do this, and now you're working to build your wealth. And this brings me to number 2. How do you now use your money smartly to make yourself wealthy instead of just everybody else around you? Now, the most apparent answer to this is typically investing your money in stocks or real estate or crypto, but the answer can go a little bit bigger, and this depends on you. If you have debt that's outstanding, maybe it's mortgage, maybe it's student loans. If you have high interest debts like credit card debt or other sorts of high interest debts, you definitely need to pay that off right now. However, paying down debt can be a form of investment as well, because if you have a 6% debt that's outstanding and you pay that off with this money, well, you're getting a guaranteed 6% return on your money. If you invest this money in the stock market or the real estate market, your goal is to get a 7 to 10% return on your money. Maybe you get more, maybe you get less, maybe you lose some money, but the goal is to get 7 to 10%. However, it's not guaranteed. But when you pay down your debt, you're getting a guaranteed 6% return on your money. Now the question is, what is your goal in your life? And what is your risk tolerance? If your goal is to live big and you want to take big risks and you want to do whatever it takes to make as much money as possible, as quick as possible, then don't worry about paying down the debt. Invest in yourself, build a business, do something that way you can grow your income as quick as possible. And don't worry about the 6% because now you're working on taking on as much risk as possible to see the biggest returns. If you say, I just want to be financially free and not have to stress about money, I don't want to be worried about money, I just want to be able to live free, then pay down that debt as fast as possible, because as soon as you pay down the debt, your expenses start dropping quickly. And now you can have more of your income being used to invest and save and build more of that sort of wealth. So this is where you got to be honest with your own risk tolerance and what type of lifestyle that you want to live. The key here is now you're not just using your money to buy liabilities, you're using your money to buy assets, and then you can use your assets to pay for your liabilities. Remember what I talked about before? When you go out and buy Lululemon, you buy some Apple AirPods, you go to Amazon, you go shopping, you go to Kroger, all these things are liabilities for you, but they're an asset for these companies. When you go and buy a pair of Lululemon leggings, well, that's an asset for Lululemon. It's a liability for you. It takes money away from your pockets, doesn't make you any money, but it makes money for Lululemon. When you go out and buy some Apple AirPods, it makes you look cool, makes you look like you're a baller, but it's making Apple money. It's actually making them rich. It's not making you rich. When you go out and spend money at Kroger or Amazon or wherever, you're spending money and it's making these companies rich. Now, it doesn't necessarily mean that they're evil or that they're bad. All this is how the system works. So what you need to understand is, okay, this is how the system works. How can I use it to my advantage? That means now you using your money to buy some of the ownership of these companies. When you go to the stock market and you buy a share of Amazon or Apple or Lululemon, you become one of the owners of these companies and you get to share in the profits, but that requires you now to lower your liabilities. You spend less money today. You don't look as rich because now you're actually trying to become rich. See, what happens to so many people is you start spending all your money and you want to have the nice stuff, you want to have the brand name stuff. Well, what you're doing is you look rich, but you're actually broke. You're product rich, but you have no money. You're making everybody else rich. You're making Apple rich, Lululemon rich, Gucci rich, Louis Vuitton rich, but you're keeping yourself broke so you look rich. So the richer you look doesn't necessarily mean the richer that you are. This is where now you want to take more of your money so you can look less rich, that way you can become more rich. And the way you do that is now by building equity, whether it's by investing in these stocks, maybe it's investing in real estate, maybe it's investing in cryptocurrency, depending on what your interests are, depending on what you believe in, and depending on what your risk tolerances are on where you want to invest your money. But this requires you now to live below your means, that we have some extra cash to invest. I mean, it's really a very simple formula at the end of the day. It's very hard to do, but it's simple because now you have income minus your expenses. The smaller you can make your expenses, the bigger the margin that you can go out and invest. This is where the real wealth is built. The real wealth is built here on the investment side. And so the more money that you can invest, the faster and more aggressively that you can build this wealth. Now, if you do want some extra advice or help on how you can start investing your money, if you want some additional coaching on how to invest your money in stocks or real estate or cryptocurrency, we have tons of resources on our YouTube channel. And I also put together a program, it's an app called Market Insiders, where you get weekly coaching sessions on stock market, real estate, and cryptocurrency coaching. It's not actual advice, they don't tell you what to do, but they'll help guide you on how to be a better stock market, real estate, and cryptocurrency investor. If you want to try it out, I'll give you a free 10-day trial to go through the entire app to start learning and see what's right for you. So if you want a free 10-day trial to Market Insiders, I'll put the link to how you can do that down in the description below. But this is where now earning more money has the biggest impact and the most power, because now you understand how to use your money. Now you have built a system where once you start earning more money, your more money has to flow through this system. I do not want you to forget this system, because if you forget the system, then what happens? You start earning more money and then you start spending more money and then you forget about the investments, your savings don't grow, and then your wealth doesn't grow. You buy nicer stuff, but you don't become any richer. That's why you have to know this first. You have to have this basic financial education first, because now once you make more money, your more money is going to have the biggest impact. And now you're investing more aggressively, you're saving more aggressively, and you're also living a bigger lifestyle. This is where you want to have a system like this. That way now you can grow with your higher incomes. Now the question is, how do you earn more money? And this is where You got to again understand you, because not everybody's meant to be a side hustler. Not everybody's meant to be an entrepreneur. Not everybody's meant to be a salesperson. You got to understand what's best for you, but you have to be willing to invest in yourself, invest in your own skills. Even if you don't want to be an entrepreneur, you got to be willing to invest in your own skills. So if you want to be a business owner, go out, start a side hustle, start your own business, right? There's tons of side hustles out there. You can start with Uber, you can start with Lyft, Grubhub, Instacart. I mean, there's so many different things out there. You can be a digital freelancer. All these things can earn you an extra $1,000, $1,500, $2,000 a month, depending on how much money or time you're willing to put into it. Now, if you want to build your own business, again, it takes more time, more effort, but there's an unlimited amount of money that you can earn from it. And with any of these things, you have to be willing to invest in yourself. But even if you don't want to be this type of side hustler, a freelancer, you don't want to be a business owner, you can still invest in yourself. Maybe work to become a better employee. Work to become more productive. Work to get a better skill. Work to get a promotion, because now what you're doing is you are investing in your own skill, your own capital. That way now you become more marketable and you have more skills in the free market. That way now at your job, maybe you can get a better promotion. Maybe you can work to get a better position. Maybe you can work to get a bonus. Maybe you get a different job. Maybe you work for a different company that will offer you something better based off of what your skills are. But you have to be willing to produce more skills. And this requires you to get not so complacent with where you are right now and be willing to work for something better. Be willing to provide more value. A lot of times you have employees that just say, I want more money. Why? Because the cost of living is higher. So if you're not willing to produce more value, it becomes harder for you to sell to your employer that you just deserve more money. But if you can say, hey, look, I'm willing to do X, Y, Z, I've gotten better at this, this, and this, and I'm willing to do this, this, and this, now you have a much better pitch to ask for more money. And now as you start asking for more money's got to go down this funnel. But it requires you to be willing to invest in yourself. That's time. Maybe you watch YouTube videos, maybe you read books, maybe you invest in classes or get a certificate where now you are investing in your own self because you are your own best investment. And if you don't want to do a job, then maybe it's your own side hustle. Maybe it's your own business. Again, more risk, significantly more risk, but unlimited potential return. I started Minority Mindset with an investment of, less than $100 because I just started making videos off my phone. Minority Mindset slowly started to grow. And over time, it became a full YouTube channel, a full brand. And then I spun this off into other companies, things like Market Insiders, the investment education app that I built. I built it into Market Briefs, my financial newsletter company that I built. And all these things started with an investment of less than $100, but it was a lot of time, a lot of learning, a lot of sacrifice, a lot of risk. But you have to be willing to take that first step, be constantly willing to improve, be constantly willing to invest in you, and make better decisions. I mean, you gotta be willing to make mistakes and take that risk, because without that risk, nothing else is possible. But the thing now that you have to understand is as you start making more money, you gotta keep the system. Because if you don't have the system, the more money just gets spent, and then like the majority of people, you just wonder where the money went. If you enjoyed this video, you should watch my video on the 5 biggest lies that you've been told about money. I think you'll get a lot from it, and you can watch that video by clicking this button right over there. Thank you for watching, and as always, keep hustling. If you make $1 million as an investor, guess what? You get to keep more than $700,000, between $700 and $800